Hey guys, so Jerome Powell has just given his much anticipated remarks at the Jackson Hole Symposium. Now, the whole stock market has been waiting for these remarks, and he came in more dovish than expected. So dovish meaning more accommodative of monetary policy, and the stock market is loving it. So the Nasdaq is up almost 1%. You've got the S&P up 70%, 0.7%, and the Dow 0.6%. But what exactly did he say? Well, let's summarize his remarks. The first thing he did was share two tales of concern to illustrate kind of his predicament based on the 1950s and 1970s. And he said in the 1950s, he learned that we learned that we cannot try to offset temporary, or in other words, transitory inflation. Now, what he explained was that, and this is a very good point he makes, is when you make monetary policy changes, i.e. tapering, which we're all talking about, then there's a 1 year lag in those policy changes taking effect. Okay, so if let's say we want to reduce inflation, and inflation today is at 5%, and we start reducing our tapering now, that could take a 1 year effect to take place. But if we felt that the inflation in the first place, the 5% we're seeing today, is transitory in nature, then then inflation could already be low by the time the tapering has finished and the lag period is complete, and therefore could have a more damaging effect on the economy. So almost what he's saying is we need to be very careful that we don't start too soon if it's transitory, because we may not need to start as fast and as aggressively. He mentions that there's two things at this moment. We've got a slack remaining in the labour market, and he also mentioned that the pandemic is still evolving and progressing through the Delta variant. And he said extended unemployment can cause innate harm to the workers and therefore the economy. He then said there's another tale of which kind of summarizes his other view. So that's his view around, we don't want to start too soon. But then he said we central bankers can't take transitory inflation for granted either. Okay, so he's saying we can't act too soon and just be hard on inflation because it could be transitory and that could damage the economy, but we can't take it for granted either. And he points us to the 1970s. And he said in the 1970s, energy and food prices in particular saw a massive shift up. And that led to the headline inflation readings being high, elevated for a period of time. And he said once those core elements eased, then core inflation still continued to go up. And the rationale, to all intents and purposes, behind that was that consumers had come to expect high inflation, and therefore it became a self-fulfilling prophecy. Now, this is a similar situation to what we're finding ourselves in now. We can see that there's been and Jerome Powell talks about this as well, we've seen that there is a bit of an inflection point. We're seeing some of the drivers which were causing high inflation, such as second-hand vehicles, have hit an inflection point and starting to trend down now, and then we just need to monitor whether that core CPI reading is still going higher because the public is expecting that inflation. And then Jerome Powell just reiterates what is his task, and he's saying his task is, and his challenge is, deciphering whether this is transitory inflation or is it a more persisting inflation to the likes of the 1970s. And he needs to time his intervention, i.e. the tapering process, at the correct time. He then says, look, I'm not in a rush to, he's basically saying, I'm not in a rush to make this decision. And we made numerous videos about this leading up to the Jackson Hole Symposium, and we've hit the nail on the head, because he's saying, I don't need to make a decision now at Jackson Hole, even though a lot of the markets are expecting it. He's going to wait. And he mentioned that he was in July of the opinion that tapering should begin before the end of the year. And he's saying data since July have been showing that trend as well, because we had better jobs figure and we saw an inflection in the CPI reading. But he has said, I want to focus on more incoming data. So what he means by that is between now and the next FOMC meeting, which is about the 22nd of September, we've got two more important readings. So on the 4th of September, we're going to get our non-farm payrolls again for the month of August. And on the 14th of September, we're going to get another CPI reading. So if you remember, we inflected down on the CPI reading. If you haven't seen that video, please do go check it out. But if we inflect a little bit down and more and show that it was transitory, then that could arm Jerome Powell going into the 22nd of September meeting with the information he needs to then give the green light for a taper either beginning October or November. If he doesn't see that and inflation either stays horizontal or even worse goes up, then he knows that we're not quite ready for the tapering process. So he's definitely waiting to see the figures for the head. And he reiterated that was the path ahead. He said the committee is steadfast to support the economy for as long as needed. He said the current monetary policy is well suited and continues to be well suited. And he says we will continue asset purchases until substantial further progress. And we've heard him say this a lot, to max employment and price stability continues. And he says we feel we have met this for inflation. So he feels like we've got there on the price stability, but he says there's a lot of progress for employment. He also then at the end tries to spend some time detaching the two. So we've heard this from him before. He wants to detach tapering from the interest rate hikes, and the market is receiving this well because the market don't want to see any interest rate hikes, and that's why equities are performing pretty well today, and the Nasdaq is up 1%, because as soon as interest rates go up from the low levels they're at now, then people are more likely to shift across from equities into a lower risk fixed income investment. So he's saying, look, there is no link. The taper, we are talking about the taper process here, and the criteria he set for an interest rate hike is, he said, we will keep Fed fund rate at current levels until we see consistent employment at the max employment rate and persistent inflation at 2% for a long period of time, plus exceeding 2%. So on the track to exceed 2%. So that's his criteria for increasing interest rates. Okay. So to summarize, despite a lot of the Fed officials leading up to this week speaking really hawkish in favor of starting taper soon, they're saying we need to act fast, inflation is here, and they've been given a lot of this rhetoric in this week. Jerome Powell has come out more dovish, and the S&P and the Dow and crypto is actually climbing because of it. Okay, so it looks like there's no sudden knee-jerk reaction to a taper. Jerome Powell is saying we're on the right path. I said that in July. The data since then has suggested that, but we cannot just assume that inflation is persistent. We cannot just assume that the Delta variant is going to be an issue. We have to see it play out. We have to see a few more readings in the jobs figures, because if we have a really good jobs figure and inflation ticks right down, then maybe he needs to be in a position to have it take a different action. Okay, so he definitely wants to see these come through before he makes a decision, and the market is responding well. So there you go, guys, an update on Jerome Powell's remarks at the Jackson Hole meeting. We will no doubt cover the non-farm payrolls on the 3rd of September and when the CPI comes out on the 14th, because I think once we've had those, we can go into the FOMC meeting on the 22nd, and then I wouldn't be surprised, given the right readings, and we'll cover them when they come out, if Jerome Powell is confident enough to then announce some sort of start date for taper. All right, there you go, guys. There's the update. See you in the next one.